What's going on, guys? Brian's here. Today is Thursday, December 21st, 2023. The market is closed, but we will be looking at yesterday's price action here, which was December 20th, because there's an important lesson to take away. Now, I've mentioned shorting on this channel before. It's not something that I like to cover that often because I don't think most people should be shorting the S&P 500 unless you've had a few years under your belts and you really understand price action. There is a term called backside weakness. This is what's referred to as front side strength, and when you're shorting, you want to short weakness. You do not want to short strength. The S&P 500 generally trends up, and even during a bear market, there are very strong rallies. So you need to be very careful whenever you are shorting. The backside weakness is a principle that most low float penny stock traders will use. Whenever you're trading penny stocks and you're deciding to short, you need to be very careful because it is very important to understand or be strict and disciplined when you are shorting low float penny stocks, because penny stocks can sometimes 2x, 3x, 4x overnight, which means if a stock is going up and going up and going up, if you keep trying to short it just because it's going up, just because you think it's overextended, you can blow your entire trading account, and that's very dangerous. So they end up having to have very strict principles in place. If we take a look at the SPY on the daily time frame, while the S&P 500 is obviously not a penny stock, one can argue it's definitely going parabolic as if it is a penny stock back in 2018, 2019 days. But if we take a look at this right here, this is coming up on the all-time highs, which is the SPY, and everyone has been talking about how the market is overextended, how it should pull back, it has to pull back, it's not healthy for it to keep going up. All those opinions and all the speculations is one thing aside. The important thing to take note of right here is that we are in a very strong uptrend, and that's what's been happening with price action. So if you keep trying to short every single day, you keep trying to short, you're going to put yourself in trouble. If you are a day trader, then what are you going to look for? What ingredients or what key signs are you going to look for when you're trying to short intraday? That is the purpose of this video. So if we jump back to the SPY intraday, this is a 15-minute time frame. This is our backside weakness. The only indicator I want to point out on the chart is this gray level right here. That is VWAP. It is the standard VWAP that ships with almost every charting platform out there. So I'm just going to clear the chart of all the levels. That is the one indicator, this gray level on my chart. A lot of new traders will be flocked to all these flashy strategies and new indicators that seem to pop up. If you just go to Thinkorswim and you go to your studies and you go to edit studies, and you'll see there are so many studies out there, and there's so many that are constantly popping up. For a day trader, the most important intraday indicator is VWAP, and it is free. That's my opinion, I guess. That is the most important indicator. But part of what makes VWAP great is that it is used on an institutional level, and it is just about standard across all trading platforms. That means it doesn't matter where you belong in the world, what type of trading platform you use. There might be slight variations in VWAP because it is calculated based on volume, and different trading platforms will show different bits of volume. But for the most part, it is standard. It is not like an EMA or a SMA that some traders use the 9 EMA intraday, some traders use the 21 SMA, some traders use the 50 SMA, others use the 200 EMA intraday. There's so many different things. Some people use intraday RSI or the MACD or the ADX, or there's just so much out there. And at the end of the day, VWAP is the one unifying indicator across the board, because again, it doesn't matter. You don't really change the settings for VWAP. If I use the 9 EMA and then another trader uses the 21 EMA, if more traders are using the 21 EMA, then it's going to show a little bit more relevance than the traders that use the 9 EMA. But then a couple months from now, everyone might then flock to using the 9 EMA, and then the 21 EMA might not be as important, and then so forth and so forth. Whereas VWAP is not changing, again, across the board. It is shipped right out of the box, and it unifies things. And that's one of the main reasons why VWAP is very important to me. If you pick up any beginner day trading books, you will learn about VWAP, and you will learn about its importance for institutions, how they might promise to execute orders around VWAPs to their clients. I think that's important for new traders to understand. Why that is because above VWAP is another thing which you'll learn. Above VWAP, it would be considered strong. Below VWAP would be considered weak. And for a beginner, you will learn to generalize it. Do not short above VWAP and do not buy below VWAP. That's one of the things in which you're going to learn. So if we jump to, say, for example, a day like this here, and I'm just picking a random day on my chart. This is VWAP, again, this gray level. And let's just say you decide that you want to buy down here. This is not going to be a place, yes, you can say, you know, we're at some sort of support level or whatever other reasons you might find. The thing is, this is VWAP. Price is below VWAP. This would be considered weak because price can continue to keep selling off. So if you are buying here and you're buying here, what happens if this didn't happen and price just kept going lower and lower? However, if you wait for price to get back above VWAP, you now know exactly where you are buying. You are buying the volume weighted average price. That is what you are buying. So if you were to call, you know, your fund manager, you were to call your boss and you traded at some sort of a prop firm, or you had some sort of person that was working above you in some sort of hierarchy at some sort of institution, and they ask you, hey, you know, what were you buying? You say, hey, I was buying VWAP. You know, at 12:30 Eastern time, I was buying VWAP, and they'll know exactly what you're saying. You were buying the volume weighted average price for that day. Right off the back, you're already going to set yourself above a lot of other traders that don't know what they're buying. If you can label exactly what it is you're buying, you're already setting yourself light years ahead. On top of that, you now have a dynamic support or resistance level. In this case, VWAP will now potentially become your support level for the rest of the day. If you're buying in this area here, this is strength returning back to the markets. This right here is weakness. We're below VWAP. Then we pop back above it and we hold. You are now buying the strength that has returned into the markets, and then you can continue to ride this potential trend as long as price does not break back down below VWAP. Hopefully that makes sense. If we jump to yesterday's price action, this is price holding above VWAP. The morning volatility is usually ignored. That first 15-30 minutes of the day, the market is establishing itself. It's filling all of the market orders from the previous day, from pre-markets at the open. If you just wait 15-30 minutes after the day, you'll generally get a clear direction for the markets of that day. A lot of the morning volatility and noise will subside, and now we have clear identifying price action. So these first two 15-minute candles, we're ignoring those. This is now 30 minutes into the market open. We have a nice push. We have VWAP right here. There is no clear reason to short yet. However, once price is broken back down below VWAP, we have a reason to think to short because we have a clear level to risk off of. Meaning, if I were to make this a little bit larger, if I'm deciding to short here, my stop loss can be right above VWAP, or it can be above this 15-minute candle right here. In this case, the high of the previous candle that was above VWAP. Right? This can change. Everybody has a different method. At the end of the day, it depends on what your risk to reward is. What also made yesterday very significant or important or easy to tell this was a good level to short was the fact that we had that key level, which was 475. If you've been following along with any of my videos recently, then you know that at the start of the week, I've been sharing on YouTube how I draw out my gamma exposure levels to start the week, and these essentially become a blueprint for myself. So in this case, 475 was a very significant strike for myself, and then 476 is where the positive GEX stopped really increasing for the SPY, and then we had a spike up at 480. If you're new to this channel and you're not sure what I'm talking about, so let me just open this up here for you right here. This is what's covered. So actually on this YouTube channel right here, if we come, this was 3 days ago. This is the video in which I'm referring to at the start of the week. I've been doing these now almost every week, and it is based on this gamma exposure profile. So these are the levels in which I'm talking about right here. This is the SPY. So at 475 and 476, you guys see the positive gamma kind of just dropped. I call this the positive gamma cliff. This is where positive gamma just drops. And then I marked on my chart 480 because if the SPY held above 475, then I would have expected it to gravitate towards 480. However, it needed to get over 476 first. 475 to 476. These huge spikes right here that looked like two towers was the area in which I was expecting the SPY to have a little bit of difficulty or trouble getting higher. If it got higher, then I would have flipped the script and then expected us to go to 480. In this case, we never got higher than 475. We remained in this area and price was choppy in here, just as was expected at the start of the week. These videos here that are shared are at the start of the week. That is when I do most of my planning. That is when I calculate these levels, and that's when I draw them out on my chart. So I'm doing the work at the start of the week, and then I'm waiting for price action to tell me where do I enter my trade. In this case here, Price continued from Monday straight into this zone, and then it got choppy between these two important strike prices. And then once it broke down, I used that as my entry. SPY puts that were going for 471 for the Friday expiration, I got in around 30 cents. I ended up getting out around 66 cents. They ended up going all the way up over $2.50 if I remember correctly. I was out well before this drop happened here, all the way to the 471 puts. Never would have thought they would have actually went in the money in the same day. So I left about 1,000% on the table, which is ridiculous to believe, but that's just the nature of when you're trading such short-term expiration puts. And when the VIX has been as low as it is, puts are very cheap right now, relatively speaking, which means there's going to be plenty of opportunities for potential 500, 600, 7% returns. I wasn't even trading the 0 DTEs. The 0 DTE SPX options went over 10, 15, some even went over 20,000%, which is crazy. But that is the type of opportunity when you know exactly what you're looking for. This video should become a staple in your mind for exactly what to look for when you're trying to short. Step 1, let price exhaust itself. Have your level predefined. In this case here, if we were to take a look at this, let's just say this was your resistance on your chart right here, or your potential resistance. We can see here on Tuesday, market opens up and then it rallies straight into this level. This is a nice green level. We are above VWAP, which means this is not a good place to enter a short trade. Just because you have a potential resistance does not mean anything. This is front side strength. The markets never broke back down below this level. We were never back below VWAP. Therefore, there was no short trade on Tuesday. Now we're entering Wednesday. The market breaks above this level, but then it breaks back down below it. So we are back below a key level. We are also below VWAP. We understand where we are in the larger time frame. We understand what we are looking for. This is a massive uptrend that has not had much pullbacks. So we know price will inevitably exhaust itself. It doesn't mean the SPY has to drop all the way back down to 440. However, it will consolidate. It will have times in which we'll have a slight little break in price action for a bit, and that can cause some sort of a sell-offs. I didn't want to hold my short trades or those puts because there wasn't really a major catalyst that I was aware of at the time. The market needs reasons to sell off, but it does not really need reasons to continue going up. I like to say for every one reason you have to go long, you should have 2 reasons to go short. Let's take a look at Tradingview for a second here, and let's actually go through this price action in real time here as if we were at the start of the day. So this is the ending of Tuesday, and then let's jump to the next day here. So this would be the start of our Wednesday. Let's mark our significant level on our chart, which was 475. So this is our expected level as some sort of a resistance. This is where we were expecting, the markets to stall out. And then let's just let this play out and we can see. So we get this little bit of a rejection. It gets bought up right away. This is the same 15-minute time frame. And you guys can see here, just waiting. Let these 15-minute candles close. Let observe for a bit. There's no need to jump in so quickly. Price is above VWAP. If price was to break back below VWAP right there, I probably would have entered in some sort of a short trade. But we can see that did not happen. So I'm not trying to predict. I'm not trying to project. I'm just sitting back and waiting. The time will come where the exact criterion which I'm looking for will be met. So this right here, we get our first break below VWAP. So now I'm definitely interested. This next 15 minutes, this is where I'm mocking up my trades. This is where I'm analyzing what type of position do I want to enter. Do I want it to be a swing trade? Do I think, how low do I think it's going to go? How much do I want to risk? So in this case here, if this is what's going to be our short and we enter this trade right here. So this is the break. This is the first break below 475. So we're using this as our potential entry. And we use this as our potential risk. The risk can be about $1. So $1 risk puts us over the higher day. So this is plenty room to give the trade to work out. It meant if the SPY was to get back above VWAP, we have plenty room before we get stopped out because it can easily break right back down below. In this case, for most day traders, $1 stop on the SPY might be a little bit wide. So this is where I'm suggesting you can use the top of that previous 15-minute candle before it broke down below VWAP. That can be your stop. If that is too tight, you can also just raise it to the previous one, which is this one up here. But in this case, I'm going to use it as a little bit tighter one. Or actually, let's start with a wider stop. So I'm going to go with $1 right here. I'm just looking at these numbers. It's telling me this is a $1 stop, and then we're going to pay attention to our risk reward ratio. So this is $1.50. We want something around $2. So we want to risk $1. So this is a risk reward of 2 to 1. Let me just get this out of the way. So we're risking $1 to make $2. This is a risk reward ratio of 2 to 1. This might look like a pretty large move. This looks more like a swing trade in my opinion. A definite swing trade is going to be a 3 to 1 if I'm looking for a expected, continuation with the move, but then we know it's usually going to take a little bit more time. So I would estimate it playing out, maybe over a couple days or so. I would never be thinking this is going to happen in the same day until it does, because that's just the way trading goes. We always cry about the profits that we left on the table. But if we pull this down a little bit more, we say we're only going to risk about 60 cents, which would be right about here. So now we're risking 60 cents and we just need a 3 to 1. So let's put this right back here. Let's look for a 3 to 1. So right about here. So this is almost $3. That's all I'm looking at as I'm dragging this. So right now, this is a 3 to 1 risk reward ratio. This looks a little bit probable, looks a little bit realistic. However, I like to use the low of day as my general profit target whenever I'm shorting. So in this case here, or at least as the first take profit, depends on how much size you get. So this right here now looks like a 2 to 1. So this is a very realistic trade. I'm risking 60 cents to make $1.20. So risking 1 to make 1, 2. That is a 2 to 1 risk reward ratio in case you didn't know. So now we are in the trade and now we let it play out. And then in this case here, we see we are rewarded within 30 minutes. This does not always happen. This is in this case, this is what ended up happening to me. It was pretty cool, obviously, that I was able to get out of the trade very quickly. I didn't think it was going to play out that fast. There's plenty of different ways to take these types of trades. In addition to the puts that I purchased, I also opened what was called a long put butterfly. So this is what it looked like here. Let me actually just jump to right at 2 p.m. Eastern time right here. Started building my short delta positions. This is what it looks like. I'll just pop this open. This is a great way if you trade spreads and you want to eliminate a lot of your theta risks. Great high probability, low risk type of opportunity here. The trade ended up hitting, I believe, over 75%. I was out at around 65% as I already had these levels marked on my charts. So I wanted to make sure to get out because I was not expecting the SPY to continue selling off past this level. However, it did. We hit all the way down to 468 and then I ended up swinging some cheap out the money calls for an overday gap up as I was expecting. This is a topic for a different video, I guess, but the important thing to take note of, or the whole point of this video, is to understand backside weakness and understanding the importance of VWAP and having a key level on your chart. You want to have your line in the sand. You want to have a clear plan. I will only short once price goes above my level and then gets back below it, because now I'm shorting the backside weakness. And then on top of that, I want price to be below VWAP. It is a blessing when VWAP also lines up with your key level, because once those two are lined up, you have extra confluence, you have extra confirmation, which means you'll have extra conviction, making it easier to hold your trade. It won't always be this clean, but more often than not, it ends up being this clean if you actually wait for this. Any of the other types of videos that I've released on this channel regarding some sort of short trade, you guys will take note of the fact that I've mentioned backside weakness plenty of times before. There's multiple examples of it. Sometimes it is in the form of a technical pattern, or sometimes it's just a breakdown just like this. People that trade penny stocks are aware of the fact that everyone likes to set their stop loss in the same place. So when price is consolidating like this, everyone has their stop loss more than likely below here. And when I say everyone, obviously I'm not referring to every single market participants. We're just referring to the general markets day trader. In this case here, if this is the key level, we see that it's holding. Most people are likely setting their stop losses below here, which is why we'll see as the price comes down below here, once that level cannot hold, it is just going to be a break in price action. Everyone's stopping at the same time because no one wants to be the last person holding the bag. Everyone probably has their stop loss right in this area from the previous day, just as everyone is going to set their stop losses right below here for this day. So this is the first trigger of all those stop losses, going to trigger this massive sell-off. All these other stop losses are going to be triggered right here, going to initiate the next major selling off and so forth. And that's the way it goes, guys. If you enjoyed this video, let me know. If you want to see a little bit more type of price action, type of very specific type of things to look for when you're trying to enter your trades, when you're looking for what types of signs to trigger your trades, let me me know and I'll be happy to share these. I've shared plenty on this YouTube channel before, usually comprised around VWAP, because again, it is the #1 intraday day trading indicator in my opinion. Thanks for watching, guys, and I'll catch you in the next one.